Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with this first move to the downside over here, which we have identified earlier this week as a three-wave structure in a wave A, B and a wave C ending diagonal. Highest probability scenario of this move down, as impulses to the downside were very difficult to count. Now, because the higher probability over here is a three-wave structure to the downside, it basically means that the higher probability at the moment, as it stands with what we have, is higher to eventually take this high over here. So even if price dips down, the higher probability is that it will eventually find the strength to take this high over here, or it will continue to the upside over here, and we are already working for price to get to higher prices and take this high. Now, if we look for the scenario to the downside, we can label this structure over here as a zigzag in a wave W, then a wave X over here, and then we're looking for a three-wave structure in a wave Y in a double zigzag, ABCW, X, and then another ABC in wave Y. Now, most commonly a double zigzag is quite a steep structure and it starts to be quite horizontal, but the scenario is not yet out of the books because we are then looking again for an ABC to lower prices. Now, if you look at my support box over here in white, it has already been tapped once, 27.1k to 27.2k, and below that there is not too much that I have over here regarding great support. The next area of interest here, 26.2, 26.3k, which of course is quite low. It's all the way down here, so that would be interesting to see if price actually goes and falls through this area, how deep it will go and how quickly it will do so. Now, if we want to see upside and look for price to move towards the upside, then we're looking here for a wave A or a wave 1, B or a wave 2, and then we want to see continuation in a wave C or a wave 3. So we're looking for impulsive structures on the lower time frames, and this has to be a corrective structure on the lower time frame. Now, if we look into this bullish scenario, then this is what we are then looking for on the lower time frame if you want to see more upside already. So we have a wave A or 1 over here, 2 or B, looking for C or wave 3. Now inside 2 or B, we then have an expanding flat A, B, C to the downside, ending inside the 21.618, which is the most common target area for a wave C in an ABC expanding flat. Now, after this ABC, you're then looking for impulsive structures continuation to the upside, where the most common target area for wave C is between the 1 and the 1.236, taken from the low to the high of A to the low of B, which, as you can see, is just above this high, and it's also just below the daily naked point of control we have at 28.3k. Now, what is interesting, however, is that if price would manage to take this high, then why not go all the way here? Because time-wise, this corrective structure over here from the low that we made and everything that came afterwards is already twice as long in time as this structure to the downside. So a trend-based fib from the high to the low, and then you double click over here, and then you're comparing this move down in time compared to the sideways move we have at the moment in time. And if we are looking for price to move towards the upside and go and finish a wave C and then move towards the downside, and then a W, X being here and Y, then X is getting quite long. Now, it is possible too, but if you take this high and the daily naked point of control, then I'd be looking for new highs. But as you can see, we are currently at resistance, as mentioned in the morning video here, between 27.7 and 27.9, with the daily offering a great resistance over here. So it's all about observing the reaction around this area. If price can get through this area, then I would be looking for the daily naked point of control and the high over here, getting through that area, and we look for new highs, right? Because we also have the local bearish scenario, where in this move towards then the downside, which of course then matches this structure here, and then a W, X, and then we're looking for a three-wave Y as well to the downside, right? And then a wave A, B, and a wave C. In this particular scenario, we are then looking for this wave B to be a corrective structure. So not the beginning of an impulse to higher prices, but we're looking at this as a corrective structure. Now, there's of course a couple of corrective structures: zigzag, WXY, flat, and triangle. And inside wave B, we want to at least identify one of those. Now, let's go from the bottom to the top. A triangle, well, at the moment doesn't look like a triangle, right? A flat is a 3-3-5 wave structure. At the moment, we do not see this as a flat. Price did not take this low over here. So that's not really something I'm thinking about. Then we have a zigzag and a WXY, and that's where it might get interesting for this wave B. Now, if we look at a zigzag is a 5-3-5 wave structure. Bit of a problem. This could have been a zigzag over here, but then you want to see a wave 4 and a wave 5. But if this is 1 and this is 4 of a zigzag, we have overlap, we have to think diagonals, and then the final move 5 is too long, invalidating a contracting diagonal. Now, if we think about a zigzag that's already like the 1, 2, 3, 4, 5 diagonal invalidated, so then a double zigzag is basically the only bearish structure I'm thinking of. So then we have a W over here in zigzag 1, then you have a correction, and then over here you're going to be looking for a zigzag 2 to the upside, which then has the target around this target box over here, and you'll be looking for downside. And that's why observing the reaction at these target boxes is so important. And of course, I like to use CVD to observe the reaction over here. Now we have a very, very limited price action regarding CVD because it just hit the daily, only a few candles to the downside. So you can't really read into it too much as well. We didn't yet build any CVD divergences on the right side of this new high or low. That is preferred. Of course, we can take a little peek to the left and see if there's bullish CVD divergences here, for example. But at the moment, that's not the case. It's neutral, even with the drop in CVD here. But preferably, you want to look at CVD divergences on the right side of a new high or low and look if we get bearish CVD or if you get bullish CVD divergences locally. But at the moment, we are at resistance, and the only proper bearish scenario fitting B would be a W, X, and then a Y to the upside. Target is the target box over here. Look for a reaction, potentially bearish CVD for downside. Could be nice, of course. Or if price starts to build bullish CVD divergences against resistance, I'll be looking for price to move towards the upside. Now, we do have the weekend coming up. The weekend is famous for its ranges. However, before the weekend, we first have news coming up, 2:30 p.m. Central European time, which can increase the volatility to, of course, the up and the downside. We don't know. We have to wait and see what the news does. We can only pray the probabilities from an Elliott Wave scenario. But at the moment, from an Elliott Wave scenario, we're right on top of the decision-making area of continuation or downside, right? Either we're looking at a 1, 2, 3, 4, 5, or this to be an ABC, or we're looking for a WXY, and we're looking at this being an ABC, right? But just the fact that over here, this looks like a three-wave structure, as mentioned at the beginning, ABC, highest probability, we could eventually, probabilities are higher to take this high eventually. But the thing is, we don't know if we then first go down or up. And if we do go down, then the question is, if it's going to be a very, very strong impulsive move, well, then the probabilities that this is a 1, 2, and eventually continuation down in a 3, those get higher probabilities. But we're not there yet. We're only here at the moment, and we can only analyze the chart as it is and what we see. If we look at the CVD divergences over here, then you can see we did have bearish CVD divergences on the chart. Unfortunately, not with this high. That would have been ideal. This is a little in-between high, which is not really something I necessarily look at too much, but it is a bearish CVD over here. We did get a proper move down. But then we started to create bullish CVD divergences here as well with the low. That's interesting. And then very locally also bullish CVD. So higher low in price, lower low on the CVD chart, which I'll show you over here. If we go to the 50-minute, I zoom out, then you will see these bullish CVD divergences over here. So higher low in price, but look at the blue line. It's below my, over here on the right is below my horizontal cursor line. So bullish CVD divergence on the chart. And then very, very locally here, we also had a higher low and lower low on yellow. So that is quite interesting, of course. And the bearish CVD divergence was with this pivot. And if you look to the right side of my cursor, then you will see that the yellow line crossed my horizontal cursor line. Also, when it made this high, is a bearish CVD divergence. So yeah, we're at an important area on the chart. Very interesting to observe the reaction. So then the probabilities is also well, if we look at the low time frame and we basically zoom out a little bit, then the probabilities that price will eventually take this high is higher, right? Now, more locally over here, That is where the crux is, right? So based on this move to the upside, like a double zigzag, we've been talking about it in the past weeks because it starts to happen a little bit. They're not that common per se. So thinking about continuation, at the moment, based on the price action over here, we have volume increasing a little bit as price is moving to the upside, bullish CVD here, but those already played out. So continuation might have a little bit of a higher probability, but honestly, we are at resistance. Of course, that's not a place to long, right? We have to observe the reaction over here and then see what happens, which is also what I then wrote in the probabilities box, which is the most important sentence in there. It is observing what price is giving us, right? Observing what happens on the chart. Maybe we get a market structure change, bearish CVD. Well, then we're simply going to be looking for downside, right? Because we can still have the bigger WXY in play as well. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.